What's up everyone, it's Scotty with Money Investing. In this video we are going to be talking about SOFI, ticker symbol SOFI, which pretty much dropped a little bit over 12% after reporting earnings, revenue, everything was good, but yet the stock price did drop a little bit over 12%. So I'm going to break down everything you need to know about this company. We're going to do some intrinsic value calculation as well based on the price to sales multiple because the company does not have any profitable earnings yet. Hopefully they turn the corner at the end of this year, but right now I don't own any stock in SOFI. I've been patiently waiting for the price to be a lot more reasonable, and of course for the company to turn the corner towards profitability fairly soon here. So as always, if you enjoyed this video, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below if you're interested in joining us, and of course getting access to all the binds alerts, options alerts. Is the first week of the month and usually the best time to join if you want to take advantage of that as well. So first things first, let's talk about the price action. Absolutely getting collapsed at 12.2%. It did actually start off well. So on the 4-hour chart, if you'll notice, we were much higher, trading as much as $6.96, so almost $7 right when the markets opened. So it was up at one point over 6.6%. And this right here was the entire selling pressure, down over 22% from its highs of almost $7 a share. So intraday definitely did sell off quite aggressively, and of course during market trading hours down about 12.2%. So this really tells me that this was very much to do with what Anthony Noto may have said during the earnings call, because the numbers overall were good. I mean, you can see the members growing, 433,000 new members, bringing the total to 5.7 million, and that's up 46%. This right here, products, 8.5 million is where we are, and that's a 46% growth year over year, adding 660,000 new products. Now, Galileo accounts did kind of level off a little bit, so every single quarter we've seen an increase. So this was the first quarter over quarter decline since pretty much since the company started, right? So still year over year growth of 15%, and that is stabilizing a little bit. It's actually a lot lower than what we have seen in the past, and first quarter over quarter decline for the company to 126 million. Now this could be a little bit of a problem because these are cumulative numbers, right? These are numbers that how many people are actually using these accounts, and coming down from 131 to 126 is a bit of a concerning piece in itself, but not as big as some of the things that I'll talk about later in the video. So quarterly performance, net adjusted revenue, 460 million was the number. That was a growth of 43%, and EBITDA coming in at $76 million, and that was also a very nice growth on a year-over-year basis, and quarter-over-quarter also growing both revenues and EBITDA as well. So this right here is what they guided for. First quarter 2023 guidance was somewhere between 430 and 440, and EBITDA between 40 and 45 million, and they actually reported 460 with $76 million in EBITDA. So they beat on their own guidance for revenue. They beat on their own guidance for EBITDA. They also beat on top and bottom lines for revenue and EPS. And the guidance, of course, the variance to that guidance was about $20 million. Now, this right here is what they are guiding for the second quarter fiscal year 23. So they are looking for $470 million on the low end, $480 million on the high end. That's going to be 32 to 35% growth on a year-over-year basis. And of course, adjusted EBITDA of 50 to 60 million, about 11 to 13% EBITDA margin for the upcoming quarter for the company. Now, this is going to be the entire 2023 for the entire fiscal year 23. And this is what we're going to use when we are doing some calculation to understand where that intrinsic value may end up for SOFI. And right now we're looking at 1.955 to $2 billion. Is going to be a 27 to 31% growth on a year-over-year basis, and adjusted EBITDA of 268 to $288 million. It's a 14% margin is what they are guiding for. And the prior guidance was obviously a little bit lower, so they're guiding for slightly higher, so raising their guidance as well. So, when it comes to the balance sheet and when it comes to the actual, we're going to come back to this, but this right here is the segment financials for SOFI. And what you'll notice is that SOFI obviously is, the leader in refinancing student loans. And we know what's happened with student loans with the rematorians and all the problems with the delayed payments and refinancing, and just, with the Biden administration kind of putting a pause on these loan payments is really hurt SOFI's business to begin with. Because if you take a look at where these are originations, right? Lending segment and originations, and student loan has almost always been the key driver for the company's revenue. So $1 billion back in first quarter 21, 859 million, 967 million, 1.4 billion. And you'll notice that these numbers have been more or less halved since 2021. In 2022, it was pretty stable still, but starting in the third quarter 22, it dropped down to $457 million, then $405 million in the first quarter. It's still a lot less. It's actually 50% lower than when you compare that to first quarter 22 or first quarter 21. So these refinancing activities, loan originations for student loan originations specifically, is a lot lower than where we were same time last year. Now, personal loan, on the other hand, has actually gone up, right? So if you take a look at personal loans, 805 million, 1.3 billion, 1.6 billion, and these numbers have now gone up to over 2.4, 2.8, 2.4. Now in the first quarter, $2.9 billion. This is the number that I'm referring to over here. And this is a big shift in SoFi's activity in lending. Now, if you compare these two first loans versus the last one, you've got home loan originations. We've got 735, 800 million, 800 million, 600 million. And now take a look at where we just printed, $90 million only, right? That's more than, that's a pretty significant decline, right? That's about 80 to 90% decline in home loan originations for SoFi in the first quarter of 2023. And you can see the drastic difference between some of these numbers. First quarter, 2021, student loans, 4.3 million, and that number dropped down to 2.2. And for personal loans, 5.3, and that number increased by 100%. And home loans from 3 million to 966 million. Now, here's a simple question for you. What is more risky, personal loan or a home loan? I'll let you answer. It's a personal loan. What is more risky, a student loan or a home loan? A student loan. What is less risky, a student loan, a personal loan, or a home loan? It's a home loan. And the reason for those answers to those questions is because a home loan is backed by an actual physical asset, right? If the borrower defaults, the bank, the lender can go after the home, can seize the home, it can sell it for whatever it's worth, and can recoup its actual amount that it lent. But with personal loans and student loans, most of the time these are unsecured. And, if the student doesn't pay back its, debt, what are you going to garnish? You can maybe garnish their future wages, but at the end of the day, there's really no control over those types of loans. They're a lot more risky. Now, that's not even the problem because it's actually been going down, right? Because of the administration, it's actually been trending lower. We've seen in the last couple of quarters, you've seen the student loan refinancing, the loan originations have been coming down. But the bigger problem is, I think, that's going to be my expectation. That's what the Wall Street might also be seeing, is the dramatic increase in personal loans, right? From 5.4 million to over 9.7 million dollars in personal loan originations. And, considering the overall landscape of the economy with higher interest rates and the delinquencies, which are now on the rise, and if there's a potential recession down the line, what do you think is going to be the actual percentage of these loans getting paid back? Now, in the conference call, and I think in the previous conference calls as well, Anthony Noto has mentioned that their personal loan business, they look for somewhere around not really look for, but they have the threshold to get as high as 7 to 8% in a loss rate, meaning that for every $1 billion in loans that they actually issue, 7 to 8%, right? So $70 to $80 million is what they are putting aside as, they're ready to write off as potential charges, right? Charging it off and kind of writing it off as a loss. Now, right now, that charge rate is around 2.5% to 3%. If I'm not mistaken. And if that number, if during a recession starts to trend upwards, considering, all this credit crunch and considering what's going on with the banking crisis and the liquidity issues, if that number goes up to 7, 8, or even crosses that threshold to 10, 12, 15%, that's the risk. In my opinion, if we were kind of flipped the other way, if this was more or less backed by the home loans business, if this 9.7 billion dollars, because this is in, I believe, in thousands. So this is in thousands. So this 9.7 something billion dollars was over here, and this 966 million was up here. I think the situation would have been a lot different, right? A lot different because this really assesses the risk of the portfolio of the lending business for SoFi. That's really what it comes down to. That's the bottom line. And when you compare $13 billion of activity and in the first quarter, 3.5 billion of lending activity and 2.9 is coming from personal loans, that is a risky business, right? That is a risky business to begin with, right? 2.9 divided by 3.5. We're looking at 82% of their activity is coming from personal loan business, as opposed to if you go back, let's just go back to fourth quarter 21, right? If you compare that, you've got 1.6. So you got 1.6 divided by 3.7 versus 43%. So in the fourth quarter 21, you had 43% of their lending activity in personal loans, and now you've got that number at 82%. Right, so that is a pretty dramatic difference in the composition of these loans, and I think that's really where the risk is coming from, and that's probably one of the reasons why Wall Street may not be as confident with SoFi over the next couple of quarters, considering the landscape of the economy as opposed to where we were just a couple of years ago. Now this might have something to do with as well. Again, this is my assumption because there's a lot of shares sold short, about 96 million as of April 14th. Again, this number in the last couple of weeks will update, but we do still have 12.5, close to 13-15% of the float currently sold short, which is a pretty sizable short size if you consider the short sellers. And this might have something to do with that, as well as there might be a short attack, or there might be short sellers kind of trying to put pressure on the stock price to begin with and trying to make it go down. Of course, their stock manipulation is almost always there. So if you compare $2 billion is going to be that number for revenue for SoFi, and we're looking at 920 million shares outstanding. By the way, share count has been going up dramatically for SoFi over the last couple of years. We're looking at $2.17 in revenue per share. Now let's talk about growth rates. Growth rates, if they can achieve, let's just say, a 30% growth rate over the next 5 years, they're going to go from $2 billion to over $7.4 billion by 2028. I'm actually being very, very generous here. I'm actually going definitely on the higher side, higher end. I'm going to go with 15% discount rate because it is a high risk, high reward sort of type stock. And I'm going to go with 30% margin of safety. I'm going to go with 5% share dilution because they have been issuing a lot of shares in the past, and the price sales multiple, let's just start with 5. We end up at $11.01, right? And the fair value and the price right now is trading at around $5.47. And that is considering only a revenue growth rate of 30%. If I decrease this growth rate to 20%, then we end up with a fair value of $7.38, which is actually going to be in line with where we have traded in the past. So this right here is the range within which you can see that SoFi has been trading. All right, so it's traded between 850 and as low as 420. So this right here has been the entire 95% move for SoFi in just a very, very short period of time. So it is a very volatile, very aggressive stock. So it really depends on what that long-term growth rate for revenue is going to be, where that multiple is going to be. And of course, the discount rate and the margin of safety is definitely a little bit higher because of the risk that this company now starts to carry moving forward. Now, this is simply based on price of sales. I would still like to look at the EBITDA. So if you come back to the valuation, EBITDA they're expecting for $268 to $288 million. So let's just say that we plug that number in, 275, just so we're on the mid guidance here. And then 920 million. So we're looking at 30 cents of EBITDA per share, right? Earnings before interest, taxes, and depreciation. This is on an adjusted basis. And let's just say that they're able to grow those EBITDA by about 50% over the next 5 years, right? 50%, and a price to EBITDA multiple, which is going to be a little bit different than price of sales, is, let's just say that it's a little bit closer to 10. Then we end up with a fair value of closer to $6, right? $6. So again, you got to do the math here. $6 plus about 10, you kind of average those two out. It's going to be roughly around $8 per share. $7 to $8 would be reasonable, but this is based on very wild assumptions that EBITDA is going to grow at 50%, sales are going to grow at 30%. It's going to be consistent over the next 5 years. So right now, unfortunately, as great of a company as I believe SoFi is and could be, there's still some risk here. And for those reasons, I am going to be willing to patiently wait for some more clarity on the business overall and how the dynamics change with respect to the student loans, personal loans, and the home loans that SoFi is originating. Support level is going to stay put at $4.15. I mean, this is a level where I could see myself maybe taking a small starter position, just a little skin in the game, because we have seen a very nice rally here of over 95 to 100%. So it's volatile, but for now it's right in the middle of that range. $8 resistance, $4 support, and right now we're just mostly trading sideways and consolidating in that range at the moment. So that's where we are. Hope you guys enjoyed this video, and let me know your thoughts down in the comment section below with respect to SoFi. Are you buying, selling, or holding? What are your thoughts? As always, make sure that you drop a like, subscribe to the channel. Link to our Discord, Patreon is going to be down below. As always, happy investing. I'll see you all in the next video.